How to protect your 401 Kelvin from the coming stock market crash for beginners.
Buffett has long recommended that investors put their money in low-cost index funds. According to CNBC, investing in a fund like an S&P 500 index fund could provide the best protection against the coming stock market crash. The S&P 500 is a broad index that includes the 500 most valuable stocks in the U.S. Investing in an index fund like this could provide protection against a stock market crash by ensuring that your investment portfolio remains relatively stable. The stock market has been booming recently. The value of major companies like Amazon and Apple has been steadily increasing for the past years. That being said, the stock market is a volatile investment environment with the potential to crash at any time. If you're an investor, you need to prepare your portfolio for this inevitability by protecting it from the coming crash. There are several safeguards that you can implement to protect your assets in the event of a stock market crash. These include shifting some of your investments into other assets whose values don't fluctuate as much as stocks do. Invest in a diversified portfolio. Investing in a diversified portfolio can provide protection against a stock market crash by spreading your investments across different asset classes. According to BlackRock, asset classes consist of a group of securities with varying degrees of risk. There are three main asset classes. 1. Equities. 2. Bonds, also referred to as fixed income. 3. Cash. It's important that you diversify your investments. This means that you should have a portion of your portfolio invested in a wide variety of investments. We spent hours to put this video together for you. Don't be shy to like us. It will help us a lot.
How can you diversify your portfolio the easiest way?
Investing in a mutual fund can diversify your portfolio by investing in a large number of different stocks, lowering the risk of a highly concentrated portfolio crashing. In addition to investing in an index fund, investing in a mutual fund can also reduce portfolio risk.
What happens in a market crash?
A market crash occurs when the confidence in the market is undermined and people begin to panic as they realize that they have lost money. It's a very frightening event for the average investor, but it's not the end of the world. The good news is that the stock market crashes about once every 10 years and has historically returned to the same level within 9 to 12 months. It's important to remember that stock markets go through smaller fluctuations every few years. It's not abnormal, so don't panic and don't sell your stocks just because they have dropped. If a crash does occur, it's important to protect your assets by investing in different asset classes, industries, and sectors in your 401k. For example, you could invest a small portion of your 401k into precious metals, bonds, or real estate. It's important that you make sure you have a strategy for protecting your assets that fits your personal financial situation, goals, risk tolerance, and time horizon. You may need to make a small investment to protect your assets, or you may be able to make larger investments if you have the money. You'll be better off if you have a strategy for protecting your assets in place before a crash occurs. Investment strategies to protect your portfolio in the event of a crash. Asset allocation in your 401k. Invest in quality stocks and indexes. A large majority of the time, the best return on investment comes from buying quality, not just any stock. Instead of looking for the highest return on investment, look for investments that have the best chance of growing over the long term. Invest in bonds. Bonds are fixed income investments that provide a guaranteed return with a certain amount of interest. Investing a small portion of your retirement savings account in bonds will help protect your assets by providing a predictable return while providing a degree of stability against a market crash. When interest rates rise, bond prices fall. It may be wise to buy bonds at lower prices in order to catch a bounce in the price. It's important that you invest your retirement savings, e.g., 401k, in a high-quality bond fund. These funds provide a low-risk return with minimal risk during a stock market crash. Put investments in a cash and cash equivalents, such as savings deposits, certificates of deposit, treasury bills, money market deposit accounts, and money market funds, are the safest investments, but offer the lowest return of the three major asset categories. By investing a small portion of your retirement savings, 401k, in these cash and cash equivalents, while protecting your assets, you can help smooth out your investment portfolio while also providing protection against a stock market crash. Investing in a high-inflation environment is not without risk. You should remember the danger of keeping too much money for too long. It is imperative to hold and purchase more profitable investments in order to achieve your financial goals. Join this helpful Facebook group to learn about saving and investing now. Gain your financial knowledge in a quick and easy way. Invest your 401k in different sectors during a recession. According to State Street Global Advisor, as economic variables and business cycles impact segments of the economy differently, sector-based investment strategies can help you align and adjust your portfolios. Invest in real estate. Investing in real estate could provide you with a long-term and consistent return, as well as protection against a market crash. Real estate has historically been a good investment and provides additional protection against a market crash. Invest in commodities. Investing in commodities can be a great way to increase your wealth during a recession. These funds invest in precious metals, such as gold and silver, energy resources, such as oil and natural gas, and agricultural goods, such as wheat. They are essential for the production of everything from food to industrial materials. Investing in commodities can help you diversify your portfolio and hedge against inflation. The value of commodities tends to rise when the stock market is down. Invest in healthcare. During a recession, a healthcare investment can be a safe way to grow your savings while also providing you with an income. For example, you can invest in a health insurance or a medical equipment company, which can increase its value over time. How to grow your investment consistently. Stay disciplined and stay invested. Even though a recession might seem like a bad time to invest, you should maintain your long-term investing plan. The key is to stay invested. Over the long term, stock market returns will likely be higher than the returns you would receive from a low-risk investment like a money market or a guaranteed investment. Stay invested during a recession. Some people might want to sell their investments during a recession due to fear. This could create a big problem down the road. If you're selling during a recession, you're likely to end up buying back in again when the market starts to rally. This can create a lot of unnecessary volatility in your portfolio. Instead, maintain your long-term investing plan. The importance of a diversified and balanced 401k account during retirement. It's crucial to keep in mind that the worth of your retirement funds will be tied to stock market performance in the long term. That means that a major market crash may severely devalue your retirement savings in the short term. However, keep investing. That's why it's important to invest and diversify a portion of your 401k in a less risky investment that provides protection against a stock market crash like bonds, T-bills, or real estate. Investing in a diversified and balanced 401k account can provide protection against a stock market crash. Give us a like and comment below to let us know what you would like to learn more. This content is strictly for education purposes only. We do not provide any investing, tax, or legal advice whatsoever. Please consult with the professionals in order to make an informed decision for yourself about your situation and conduct it accordingly. Investing involves certain risks, including the possibility that you may lose money.